Hey, welcome again to the Ashworth Wealth Weekly Market Update. Uh, have kind of a heavier topic this week, unfortunately. We're talking a little bit about the conflict in the Middle East between Israel, Lebanon, of course, Iran. As you're, I'm sure, well aware, in September, Israel launched, an offensive into Lebanon targeting the militant group Hezbollah. So this is backed by Iran. Iran, in response, fired 200 ballistic missiles at Israel, specifically at Tel Aviv. So Israel has, of course, vowed to retaliate and respond heavily in some fashion. Nobody really knows at this point what that is going to look like. Israel has just said that it's going to be devastating, surprising, etc. The United States is trying to keep Israel from targeting oil facilities. Israel hasn't said exactly what they're going to target right now. Analysts at this point in time appear to be thinking that Israel will target military sites, specifically missile sites, but they may go after oil. So that has people on edge, especially people who lived through the 70s and the regional conflict that created oil spikes and gasoline spikes in prices throughout the world. Um, that shouldn't be an issue, is the bottom line. As we preach all the time to our clients, diversification, diversification, make sure that we have a globally diversified portfolio. Oil producing nations are much more diversified now than they were, say, 30, 40 years ago. This chart shows us a little bit about where the oil in the world is coming from. The United States is actually the #1 producing oil country right now, illustrated in the light blue at the bottom of the chart. The dark blue is non-US, non-OPEC oil producing countries. And then you've got Iran right in the middle, kind of the olive green. It's a relatively small band. So if their oil production is disrupted, yes, it will have impact, but the impact will be relatively muted, is what analysts are showing right now. OPEC is the Kelly green or grass green, I guess, however you want to say it, a large section above. And then there is a checkered section above that. This is excess production that OPEC still has. So should oil production from Iran get disrupted, there's plenty of excess production from other OPEC countries that should be able to absorb the shock of what might happen. So bottom line is we're taking a very difficult humanitarian crisis and boiling it down to what it's going to do to oil, which is not exactly fun. But as your financial advisors, are looking at what is happening in the world, we're constantly paying attention to it. As you know, though, we don't really preach making big changes based off of things like this, but it is important for us to be aware of it, to be aware of what's happening. The bottom line is, as far as we can tell, and as far as the analysts that we are reading are indicating, yes, there is a potential for Israel to target Iran's oil production. Should they do that, the response to to oil prices should be fairly muted. So bottom line is there's a lot of positive things happening in the world economy right now. The stock market has been very strong. It's been continuing to produce good returns for us for this year. And so at the present time, we look for that to continue. Regional conflicts like the one that's happening in the Middle East does have the potential to disrupt lots of things in the world economy. But oil at this point in time, because of its greater diversification, feels like it's pretty well insulated from what might be happening over there. Should you have any questions about this or want to talk about it a little bit further, please let us know. Please feel free to share this information with anybody that you would like. And of course, if we haven't had a chance to sit down with you in the last little bit, please feel free to reach out. But we are actively going through everybody and getting a meeting scheduled. Hope everybody is having a wonderful week, and we will be back in touch next week with another update. Have a great week.